E-mini S&Ps close out the week moving higher. In fact, it was higher each and every day this week. We saw E-minis rally about 4%, ending up near 55.80 to close out another busy week. Now, a lot happened this week. We had inflation data. We got some retail sales. Both were Fed friendly as the inflation numbers continue to trickle lower, while we saw retail sales rebounding higher and still seeing those Fed rate cut expectations. Now, we did have 50 basis points priced into the market last week. Those expectations have dwindled. Now we're looking probably at a September FOMC 25 basis point cut. We'll get obviously more clarity as the weeks go on, and that meeting is not until the middle of September. But right now, the stock market has been trading on the hopes that the Fed will begin cutting sooner than later. Again, seeing E-minis close out at 55.80, higher on the day and much higher on the week. Now, what does this mean for volatility? Well, as we've talked about, volatility moves inversely to the indices. So as E-minis have been rallying over the last 2 weeks, we saw them move from those April 5th lows rallying 9% to where we closed today. Volatility has been doing the exact opposite. Now, we did see a big spike in volatility on that big move lower on August 5th. And since then, volatility has reversed and is actually back now below where we were when we started back on August 5th. So volatility has been moving lower as the indices have been moving higher. Lastly, let's talk about what we have next week. Next week, we do have more to come. We have the July FOMC minutes. We'll continue to get earnings with some big name retailers coming out next week. And lastly, and probably most importantly, we'll get the Jackson Hole Symposium, where the Fed chair is scheduled to speak on Friday. So another big week for stocks, moving higher. In fact, moving 4% higher on the week to close at 55.80 ahead of next week's July FOMC minutes, more earnings, and Fed Chair Powell speaking from the Jackson Hole Symposium.